definition and its types. So, as we have discussed in our earlier chapters on financial management, and the first session, which understands that financial management has three implications or three important aspects known as financial management decisions, which is the investment decision. That is, you try to choose an option where you are going to put your money to expect the returns, and to make such investments you will need money. So from where these money are to be arranged, that is the financing decision, which primarily deals with the composition of the funds that will be arranged to satisfy the investment needs. And once we have done these two decisions successfully, then obviously there will be the profits, and those profits will be used to pay off the cost of funding, that is the cost of debt and the cost of preference capital, and both of them being the fixed financial cost. Therefore, whatever is remaining out of the operating profits, and after paying the inherent income tax, the returns are with the equity shareholders, which have to decide whether that money is to be kept in the business as reserve and surplus for future investments, or that money will they take home in the form of dividend. So what is the quantum of dividend and what is the amount of reserve and surplus? That is the dividend decision. But as you will see that if you have watched my words closely, that whether it's financing decision or whether it's the dividend decision, they are dependent on the successful implication of investment decision. Because until we are able to make a successful investment decision, we will not be having the sufficient profits, and all other decisions will suffer inherently. So there may be a confusion that whether financing decision or the dividend decision affects the value of the firm or affects the overall objective of the financial management. But there has been no dispute whatsoever that a bad investment will just destroy the value of the business. And therefore, every investment decision has to be as per the standards, has to be as per the expectations, that is, has to be successful. So, we have also analyzed that because this investment decision is so crucial, therefore they have to be taken in respect to the time horizon. So the decisions which will have a recurring impact for a number of years on the life of the project, or I should say which will have a recurring effect over the business for a multiple number of years, are known as long term investment decision, and they are known as commonly capital budgeting, which are primary characteristic that they will be a initial big investment which will create subsequent yearly returns over a number of years. And because here the life is more than 1 year, that is why they are long term investments. And because it has a peculiar character that the returns will be smaller as compared to the big initial investment, and they being multiple will cover the cost and give you the inherent profits. But whatever the capital budgeting decision is to be taken, it may be successful only if it is supported by adequate liquidity. And until that long-term capital budgeting decision is supported by adequate liquidity, and such liquidity decisions are what you call short-term investment decision, and they are commonly known as working capital management. So until a business is able to effectively manage its working capital, so here the word management indicates that it is not about arrangement, it is about management. Therefore, there neither has to be a surplus working capital, there neither has to be a deficit working capital. Because the deficit working capital, that is deficit liquidity, will hamper the business. Or we should say the hamper the capital budgeting decision. And a surplus working capital will have a huge wastage of financial cost. तो आप यूजलेसली पैसे पे इंटरेस्ट पे कर रहे हो, जबकि उस पैसे की आपको अपने बिजनेस में कोई जरूरत नहीं है. Therefore, there has to be an optimization. And this optimization can be understood if we properly understand the definition of the working capital. And once we understand the definition, it will imply that there are different types of working capital. So if you see why I started with the base of the definition of financial management, because they are all seem to be linked. Until we understand what is working capital, and that will be understood only if we understand its types, we won't be understanding its implication for the management. And if there is ineffective management of working capital, then your successful capital budgeting decision may go haywards and will not give the desired results as estimated by the investment decision. And if that goes wrong, then the whole financial management objective is lost, and therefore we can say the whole objective is lost. Whole exercise of financial management is lost. Therefore, these small things which may look so small but are so crucial for a effective business management, and that is why we say कि बिजनेस में कोई भी डिसीजन छोटा नहीं होता, हर डिसीजन की implication है. अगर आप वो समझ जाएंगे, then you will always be a successful businessman. Why I'm underlining so much that आपको लगता है कि एक मशीनरी अगर आप खरीदेंगे, और ये मशीनरी एक लैंडमार्क मशीनरी है, बिकॉज इस मशीनरी का जो प्रोडक्ट है उसका मार्केट में कंपटीशन है ही नहीं, है बहुत कम कंपटीशन है. इट मींस you will be able to sell as per your expectation, you will be able to sell at the price as per your expectation, and you are not so worried about the cost because of the less competition. The product is easily sellable and sellable at a price of your choice. So this investment decision where you are going to put money on the import or the purchase of such machinery, and this investment being huge, creates a sense of risk. But what you anticipated over a number of years in the form of the returns, let's say we're presuming that everybody knows what is net present value. So we presume that it was cash flow after taxes, and it is for a number of years. So all those cash flow after taxes for a number of years being discounted, and their present value, even though more than the huge cost, is highly positive. Therefore, all those implications of huge cost becomes useless. But when we calculate these returns, then they are all anticipated, and they are all anticipated based on the anticipated sale. And this anticipated sales can not always be cash sales. You have anticipated sales, but to implicate that sales, you may have to sell on credit, because what you are doing here is a new product which though required by the market but may not have the confidence of the market. So the buyer can say that we are ready to buy, but we will use it, and once we are satisfied with the quality, or we will make the payment after a few days. And you being strong about the quality of your product, have no problem that even if the buyer is getting the goods, because your quality is so good that once he starts using it, he will become a fan of such product, and he will again buy and buy and buy. So as they say कि किसी नए प्रोडक्ट की लत लगानी पड़ती है. आप प्रोडक्ट जब तक यूज़र को दोगे नहीं, जैसे कि एक कॉमन प्रॉब्लम आजकल के स्टूडेंट्स में, चलिए मैं वर्ड रोक देता हूँ, बट सबसे पहले आपको कहता है भाई कोई गंदी आदत डालने के लिए कोई फ्रेंड या कोई नोन आपसे कहता है भाई ले मेरी तरफ से यूज़ कर ले, सिगरेट है मेरी तरफ से पी ले. आप अपनी जेब से खर्च करके सिगरेट बहुत कम लोग पीते हैं, कोई आपको ऑफर करता है, और जैसे ही वो आपको मिलनी शुरू होती है, एक दिन दो दिन 5 दिन के बाद आपको लगता है यार अब मैं पैसे खर्च कर लेता हूँ. तो व्हाट इज़ हैपनिंग कि आप किसी भी प्रोडक्ट के लिए, हो सकता है कि नया प्रोडक्ट हो तो आप उसके लिए खुद इंस्पायर ना हो, बट वंस यू स्टार्ट यूजिंग इट, then you may get a habit of it, or you because you may get impressed by such product. The same thing can happen in this case, that the product being so good, but because it was not having any user experience with the customer, therefore the seller needs to make a credit sales. So why I'm stressing so much on this, that this whole decision of the success of such good looking business decision depends upon that uh, that the seller is able to sell the goods on the credit, and once he starts selling the goods on the credit, the customer's base goes on increasing, and it may happen that your sales may increase even though your anticipated sales, and you may get higher returns even than your expectation. But if that does not go good, that you are unable to make the credit sales, your good plan may have faltered on the ground that customer was not allowed to use the product on credit sales. So, in such new business products launches, the concept of credit sales, depending upon the business scenario, may be crucial. And this credit sales require liquidity. So the business, the seller must have sufficient liquidity that he is able to maintain a continuous production of the goods, and though the sale is made but the sale is not generating cash. So what normally happens, when you produce the product, the cash goes out, when you sell the product, cash goes in, you use the sales proceeds for the production. But here, if the sales is on credit, then you are not getting any cash flows, but you have to maintain the outflow on the production. And that will be possible only if you have sufficient liquidity. So, if the business has not arranged the funds to maintain this liquidity in the form of maintenance of the credit sales, then the business may not be successful. Therefore, what you have to do, that you have to maintain sufficient liquidity so as to maintain the credit sales, which are normally known as debtors, or which are normally known as receivables. Similarly, to maintain a continuous supply, you have to have the stock in hand. And this stock in hand has to be of the raw material as well as the finished goods, and there can be a inherent stock in hand of the work in progress, that is the semi finished goods. And also, to maintain the day to day expenses, you need liquid cash, that is the cash in hand. And that cash in hand can either be the hard cash, that is the notes and the currency, or it can be the bank balance, because bank balance are always checkable, and that obviously works nothing else but just as a cash in hand. So what is happening here, that there are three kind of liquidity requirements, and if you see from the accounting perceptions, these three kind of requirements are assets, because they are giving you benefits, and because they will be easily converted into cash within a period of 1 year respectively. Therefore, as per accounting perceptions, these are known as current assets. So therefore, we say that working capital is nothing but the current asset position of a business, and that current assets are primarily debtors, that is commonly known as receivables, cash in hand, and cash in hand, and the stock, commonly known as the inventory. Okay, but when I say this, then some people say that in addition to this, there is another aspect, that if you are producing the goods and you are selling them on credit, then there is a supplier for you, and for that supplier, you are the buyer. So your position shifts. You come into that position where you were for that customer of yours. So now you come into the capacity of a customer, and your supplier, if he believes in your product, and he believes that only if you are able to maintain sales, you will be able to maintain purchases. So his output will be maintained only if you are able to make a continuous production. And because he knows that you are selling the goods on credit, on the same lines, to maintain his sales, he may be ready to give you goods on credit. So we may have this concept of credit purchases. So if you were only purchasing in cash, then you required more cash. But if you are having this credit purchase facility, then this will reduce your cash requirement, that is the liquidity requirement. So therefore, when you purchase on credit, then these expenses are to be called as payables or creditors. So some people believe that the payables, normally known as the creditors, and other expenses payable such as the workers' wages, though they are to be paid in a period of 1 year, and therefore they are known as current liabilities, which effectively, as per accounting perception, denotes liabilities, that is the payments which are to be made within a period of 1 year, and they will surely reduce the liquidity requirements of the business. So some people believe that your working capital requirement will be reduced, or will not be equal to just current assets, but it should be equal to current assets as reduced by current liabilities, which are primarily creditors and expenses payable. So if we see working capital from such perception, then we say it is a kind of gross view, and we say it is a gross working capital. And if we see it from that perception, then we say it is a kind of net working capital, because this is what you require. So ideally, net is deemed to be the working capital required, because we don't want to have excess working capital, because that will cost us unnecessarily. That therefore, though we use the word working capital, but from the point of view of the perception, they have been classified either as gross or as net, and by default, net working capital is deemed as the working capital which we use in our common perception. Okay. Now, in addition to this, so before I move on, if we see it here, that this was a quantitative perception. It was a quantitative perception of measuring the working capital, and hence the working capital was classified on a numeric perspective. Just a moment. So what is happening here, that this working capital classification was done with a numerical aspect. But there is another aspect, that if we said earlier, as we said earlier, that working capital, whether it's gross view or the net view, involves a current asset, and one of the current asset is inventory, say for example. Now, a business always works in cycle. So business is always cyclical. Now, the cyclical nature understands that somehow there is high demand, because which you call as high season, and sometimes there is low demand, which you say a low season. फॉर एग्जाम्पल, एक छोटा एग्जाम्पल है कि अगर आपको काजू की बर्फ़ी खानी है, अब काजू की बर्फ़ी आपको खानी है 1 किलो 2 किलो, और आप जाके ले आइए, लेकिन आपको लगता है कि आपको हल्दीराम की काजू की बर्फ़ी खानी है, और वो आपको अपने पूरे इजार में बांटनी है, और आपको 50 किलो काजू की बर्फ़ी चाहिए। तो अगर आप वो 50 किलो काजू की बर्फ़ी लेने घर के पास की दुकान पे गए, तो शायद हो सकता है कि उस टाइम पे इतनी बड़ी क्वांटिटी ना मिले, क्योंकि इतनी बड़ी क्वांटिटी की सेल नहीं है, और एक ये फूड आइटम है जो ख़राब हो सकता है। बट अगर आप इस काजू की बर्फ़ी को दिवाली के पास लेने जाएंगे, तो हर आदमी खरीदने के लिए खड़ा होगा, तो 50 किलो छोड़ो, वो कहता सर 100 किलो ले लो आप मेरे से। हाँ, कोरोना के टाइम पर हर आदमी को ऑक्सीजन की ज़रूरत थी, तो ऑक्सीजन के छोटे छोटे हैंड सिलेंडर्स जिनकी वैल्यू 100 से 150 रुपये थी, वो बिकॉज ऑफ द ह्यूज डिमांड उनकी प्राइस 500 600 रुपये तक हो गए। तो हम यहाँ प्राइस फ्लक्चुएशन की डिस्कशन नहीं करना चाहते, बट डिमांड बहुत ज़्यादा थी तो आदमी के पास इतनी क्वांटिटी नहीं थी तो आराम से मिलता नहीं था। तो वो हाई डिमांड थी, हाई सीजन था। और अब अगर वो प्रॉब्लम इतनी नहीं है तो वो इजीली उस 100 150 के प्राइस पे मार्केट में पड़े मिल रहे हैं, और जितने जी क्वांटिटी उठा लो, क्योंकि कोई बायर ही नहीं है। तो व्हाट इज हैपनिंग दैट यहाँ पर एंटिसिपेटेड डिमांड को देखते हुए क्वांटिटी सारी मिल रही है, और यहाँ पर डिमांड अनएक्सपेक्टेडली बढ़ गई तो उसकी शॉर्टेज हो गई, तो उसका इम्पैक्ट प्राइस पर आ गया। अब ये परसेप्शन की डिस्कशन तो इकोनॉमिक्स में होगी कि उसका प्राइस पे क्या इम्पैक्ट है, बट बिजनेस क्योंकि साइक्लिकल है, तो हो सकता है कि जब आपकी डिमांड ज़्यादा होगी तो हर आदमी को हाई इन्वेंट्री चाहिए। तो अगर हाई सीज़न है, यानी कि आपकी कंपनी का बेस्ट सीज़न है, तो हाई सीज़न में गुड्स की डिमांड हाई होगी। हाई डिमांड का मतलब क्या है कि आप अपने बिजनेस में हाई इन्वेंट्री रखोगे, और हाई इन्वेंट्री का मतलब क्या है कि आपको हाई कैश ब्लॉकिंग चाहिए। तो आपकी जो वर्किंग कैपिटल की रिक्वायरमेंट है वो हाई हो गई, एंड द सेम कैन बी द केस वाइस वर्सा। So what I'm trying to say that there may will be अगर ये स्टोर रूम है छोटा सा, तो एक छोटी सी इन्वेंट्री का लेवल जो कंपनी नॉर्मल मेंटेन करती है वो रहेगा, बट उसके ऊपर कुछ एक फ्लक्चुएटिंग डिमांड हो सकती है जो कभी बहुत ज़्यादा होगी, कभी कम हो जाएगी, कभी ज़्यादा हो जाएगी। सो देयर कैन बी इफेक्टिवली कांस्टेंट डिमांड विच में इंक्रीज डिपेंडिंग अपॉन द टाइम, but there may be a fluctuating demand of the goods. So this will hold true not just for the goods but also for the cash, because more goods means more sales means more purchase means more cash. So हर चीज़ सब चीज़ बढ़ जाएंगी, डेटर्स भी, क्रेडिटर्स भी, एक्सपेंसेस पेबल भी। तो डिमांड ज़्यादा होगी तो करंट असेट्स करंट लायबिलिटी दोनों बढ़ जाएंगे, तो वर्किंग कैपिटल बढ़ जाएगी। करंट एसेट्स और करंट लायबिलिटी दोनों गिर जाएंगे, या वर्किंग कैपिटल भी गिर जाएगी अगर डिमांड कम होगी, और कुछ पोर्शन ऐसा रहेगा जो कांस्टेंट होगा। सो बेस्ड ऑन दैट परसेप्शन of working capital fluctuation, so we say that that portion of the working capital which will be required uniformly over the life of the project is what you call permanent working capital, and that portion of the working capital which is required cyclically, बिजनेस के हाई डिमांड के सीजन में ज़्यादा चाहिए, कम डिमांड के सीजन में शायद नहीं चाहिए या बहुत कम चाहिए, उसे हम लोग बोलते हैं टेम्परेरी वर्किंग कैपिटल। टेम्परेरी वर्किंग कैपिटल, तो इफ वी शो ग्राफिकली, सो अगर यहाँ टाइम है और यहाँ वर्किंग कैपिटल है, तो परमानेंट वर्किंग कैपिटल का जो ग्राफ है वो ऐसे स्ट्रेट लाइन नहीं जाना चाहिए, क्योंकि अगर स्ट्रेट लाइन जाएगा तो हम टाइम से बिजनेस की ग्रोथ को डिस्काउंट कर रहे हैं या उसे इग्नोर कर रहे हैं। तो अगर हम उसे इग्नोर ना करें, सो इट मे हैपन that this permanent working capital may grow slowly with the time, and this graph may be sharper depending upon the growth positions of a business. And in addition to this, there can be a requirement which is fluctuating. So this fluctuating, which some is somehow higher, somehow lower, is what you call the temporary working capital. And this portion, which was normally fixed and only grows with the period of time, is what you call the permanent working capital. So this classification of working capital, as we can say, if we done on the quantity basis or we can do on the quality basis. On quantity basis, we say that it is equal to gross working capital and net working capital, and this quantitative classification helps in the required measurement of working capital for effective working capital optimization, that is the management. And this quality working capital classification can be permanent working capital or the temporary working capital, and this requirement helps in arranging the funding pattern. तो फंडिंग के सोर्स को जज करने के लिए ये क्लासिफिकेशन बहुत ज़रूरी है। और फंडिंग के सोर्स किस तरह डिसाइड होते हैं, उसके लिए आपके पास अलग अलग तरह की अप्रोचेज हैं, जो प्राइमरली तीन तरह की हैं। हम उन्हें नाम देते हैं एग्रेसिव अप्रोच, कंजर्वेटिव अप्रोच एंड hedging approach, or we can use the word, instead of hedging we can use the word matching approach. So these three approaches, you can always log on to our platform and you can call us, then we can discuss these in details when you are enrolled with us, or maybe in future sessions to come I will also discuss the financing of the working capital. So I hope this session was of help to you. On this note, myself Deepak Gupta is closing